G'day folks, welcome back to another update for natural gas. Now the overall trend is bearish after we had a bullish divergence recently. That's already, and looks like we've got another bearish divergence on the lower time frames. We'll cover that in a minute. Before we go any further, make sure you hit that like and subscribe button to support the channel, and also reference the +1 videos, links in the description below, which help you better identify some various strategies that we cover, which we may gloss over in today's video. In terms of the outlook, prices remain relatively low for a summer season, around 2.8 MMBTU, but technical resistance suggests possible upward momentum towards $3 to $3.10 if bullish momentum holds. US markets are categorised by robust production and record consumption, though inventories keep near-term prices under pressure. Global demand growth has slowed, especially in Asia, but longer-term trends remain bullish, with the IEA and Exxon forecasting significant demand expansion, especially amid energy transitions. In geopolitics, Russia-China pipelines are critical, expansion efforts intensify, Europe benefits from ample US LNG easing storage stresses, Ukraine transit cutoff increases LNG reliance for EU, US LNG export dominance reshapes global supply networks, and Australia's paradox of exports paired with local constraints illustrates regional complexity. So these are the charts for natural gas. We start off with the weekly here on the left. Here we've got the daily and the hourly. So depending on which time frame you're trading, you always trade in the direction of the higher time frame for those new to the channel. And what we've got here as well is the price well below the moving averages on the weekly. And these moving averages are again in the description below if you want to learn how to draw them on yours. And at the moment, bearish momentum on the weekly, but notice the CCI has broken into that moving average range, giving us a somewhat neutral positioning if you like. Just be cautious. Don't go long yet if you're trading on the daily. I'd wait for that to break above on the moving average of the price chart as well as the CCI to go long like it was back during this period, for example. Now on the daily, if I zoom in for a moment, you can see here we've had a declining price, and so was the CCI with a couple of little false breaks there. And here we did have a double bottom on the CCI versus lower lows on the price. That's a bullish divergence. And I drew a target range here, that 23-38% target range. If I zoom in for a moment, that's a Fibonacci range going from that low to that high. That's that 23-38% range. It's currently in that range at the moment since our last projection of that. So it could go a lot higher, or it looks like it's going to pull back towards the moving averages. You can see the CCI is pulling back still. Notice also and that's why I've got these moving averages. Let me get rid of that divergence for a moment. That's why I've got these moving averages, not just one single moving average. Because when you see a tightening or a constriction like you do here at the moment, that's a consolidation phase. Back here, for example, there was consolidation. What I'd like to see is the moving average bands widen like they were back here, consolidation, and then widen again to the downside. So at the moment, they're constricting, which means there's a bit of a consolidation. The CCI is pulling back. So just be cautious, carefully going along during this period if you're trading on the intraday. And we also look at the intraday as well, even if you're trading on the daily. We look at the intraday on the 1 hour chart to see if there's any micro moves. And by micro moves, I'm talking about any divergence. So here, for example, we've got a bearish divergence, lower highs versus high highs in the price. And that's already started to pull back. And to project a retrace on that, we go back to that significant low before that divergence started. You can see there it's pulled back into that 23-38% range, currently in that range at the moment. And that's a minimum we can expect it to retrace to. It could go a lot further, or alternatively could start to bounce and go higher from here. But at the moment, the momentum on the hourly is on the downside, even though the daily is showing bullish momentum, slight bullish momentum, not too strong actually. And that's why I like to look at the larger picture to see how the overall trend is going. So the overall trend is still bearish, even though we had a bit of a bounce here. That could just be a false break. I'll show you the back test now. So going short from this period, for example, where that down arrow is showing, would have gone short from that period, and that was around about the 25th of June. Here's the hourly backtest, taking short positions only. And again, this strategy is in one of those +1 videos. We go basically short when the CCI is declining. So the CCI is declining here, as well as moving average of the price, but also when the CCI 14 in this little indicator is in a downtrend, we take a short position, and we close it out whenever you see the price start moving against you, especially if the CCI and the price are going against you. Now during this period, you'll notice there we had a bearish divergence versus high highs on the price, lower highs on the CCI. Then you would have been an ideal spot to go short again at that point there. I've let this run through the whole period, and you can see there it's averaged down a few times, but you would have avoided going short during that period, obviously, because the price and the CCI was still in an uptrend. I like to zoom out as well at this 50,000 foot view as well. I've said it many times. You get a better picture by looking at the moving averages rather than drilling in too closely and focusing on the bug on the windscreen rather than looking at the road ahead of you. So at the moment, going short predominantly, you'd be not in a short position here. You would have avoided that drawdown. You'd be avoiding that going short during that period. And what I've done as well as I've indicated from that point, if you're going long, and I strongly suggest you, if you're going to do it, you've got to be very careful and watch it very closely if you're going to go long at this point when the price and the CCI on the daily break above. I've got the back test here going along from that point. And you can see there you would have had a nice few little trades, but again, you've got to watch it very carefully because the overall trend is still pretty much in a decline. As I said, it looks like it's pulling back and we might see a bit of a weakening at the moment. So if you're in this trade before, going long during this period, you would have closed it out, especially after seeing this bearish divergence. This is BOIL, so on the weekly first off, very narrow range there on the price after a massive drop there. Although notice here we had a bullish divergence. It didn't really bounce on that one. That divergence pretty much failed, I'd say. But at the moment, the price and the CCI are in, below the moving averages, giving us a bearish momentum on the weekly. On the daily as well, bearish momentum predominantly, but notice similar to natural gas, BOIL is also showing a bounce with the CCI constricting in that moving average range. The price is still in a decline, but notice it's breaking into that moving average range, hasn't really broken high yet. So predominantly going short during this period whenever we see both the price and the moving and the CCI in a downtrend. And this is the daily, so taking short trades from that period on the intraday. And the intraday on the 1 hour, again zooming out from that period, you would have taken short positions, and I'll show you the back test in a moment. But again, notice you had a couple of bullish divergence here, and each one of those 23-38% ranges I've marked. You can see there that broke right through it, went about probably around 50% range of the Fibonacci, then finally broke down again. You would not have gone long there. Don't trade these divergences. I use them as getting out of the trade if you're going short. As soon as you see a bullish divergence, you get out of the trade. Here's another one, a longer term on the hourly, declining price, lower lows versus higher lows on the CCI. That started to bounce from there, the CCI. And I've drawn a couple of little target ranges there. That one was hit. Let me just zoom in a moment. That one was hit there with that candle action. This one down here wasn't it. What I've done here as well, just FYI, I've drawn the first divergence to that point versus higher lows to that point. So that was your first divergence, and that's why I've drawn that target, and that was hit. The second divergence, again, another higher lows there, in the same period, lower lows there. I drew a target there, but that wasn't hit in that little range. But if you extended that whole period, that started to play out now. So it looks like it's approaching that target with higher lows on the CCI, but also higher lows on the price as well. Looks like it's approaching that target. So see how it goes in the coming hours and days. And in terms of the back test, again, going short from around about the 19th of May, which is this period back here, you would have taken short entries. A few average downs there you can see there, but overall it generated, if you're trading $5,000 lots, that generated about $1,600 in returns of trading. Next, we look at UNG. Now, UNG on the weekly is also below the moving averages of the price and the CCI, giving us a bearish momentum. We did have a bullish divergence back here. That didn't quite rise far enough. And if you draw a Fibonacci up to that point there, so that divergence pretty much failed, although we're still in a bearish momentum on the weekly. On the daily, again, similar to UNG, we've got a declining price, but notice we've got a bullish divergence at the moment on the CCI, higher lows on the CCI versus lower lows on the price, and that's starting to bounce. And again, we haven't quite reached the target range for that. If I was to draw a Fibonacci from that low to that high, you can see that that's already hit the 23%, taking it back to that high. It's not far off the 23% range. So it depends where you take it. I like to take it back to the recent high as a minimum. So I don't get too adventurous. So depending on what time frame you're trading, obviously, but don't trade these divergence. I use them to get out of, in this case, if you're going short, I would have used that as soon as I noticed that bullish divergence, I would have got out of the short positioning. That's the daily. And if we look at the 1 hour chart, similar to UNG, we've got a long-term bullish divergence here. the CCI is starting to make new highs, and you'll notice there I drew a target here for that divergence, and that's already hit that, just touched that 23% already, and it looks like it's still going to keep rising. There's no pullback yet on the CCI. These divergence targets here, you can see there that one was hit, and the reason that was a divergence target is because higher lows there versus lower lows in that little range. That was a target, it was hit. Another little range there, lower lows there, higher lows there, and I drew a target, but that wasn't quite hit. So, and then at the moment, if you extended that further, between that whole range there, that was that target range we just spoke about. Going to the back test, going short from this on the daily, from the 14th of May, which is about this period back here on the hourly, you would have taken short positions only. A few times it averaged down, and that generated about $1,400 in revenue. So this is KOLD. Now this is the inverse chart, obviously. So we've got the weekly is bullish momentum above the moving averages, and so is the CCI. Nice bullish move there. Notice also on the daily, it's actually broken into that moving average range, and the CCI is broken below. So if you're going long during this period, trading on the daily, you would have closed out your positions at the very latest when the CCI touched that moving average range. So you would have got out on that candle there. Possibly could have got out of it there as well, and then re-entered the trade at that point. So got out on that candle and re-entered long positions on that candle. Always pay attention to the CCI whenever it touches the moving average band. But notice back here we had a bullish divergence, lower lows on the price, higher lows on the CCI, bounce. That's why I've drawn this arrow for trading on the hourly. That's indicated here on the 1 hour time frame. But again, notice here we've got a few bearish momentum, a few bearish divergence throughout the whole period, and you would have closed out at the very latest any long positions along that little track of trades when it started breaking to the downside. So at the moment on the hourly, it's in a downtrend, so avoid going long on the daily until we start seeing a more bullish move on the 1 hour time frame. Looking at the back test, going long from around about the 25th of June, which is this period back here on the 1 hour time frame, you would have taken long entries. Now notice here we had a bit of a drawdown, quite a few contracts entered. Going long, you would have avoided entering those contracts. So again, this program just runs it without discriminating on the direct direction of that. The way you read this is, that's why I've got these multiple moving averages. So you can see there a bullish move on the moving average of the price, constricts, starts contracting, moving apart in the moving averages, another constriction there, then it starts moving apart again, constriction, and then it starts breaking to the downside. So at the very latest, if you're going long on that point there, you would have got out with a small gain going long, and that's still generated at that point about $900 in revenue if you're trading $5,000 lots per shares. But also notice the CCI moving averages. So you would have got out, I like to get out when the CCI touches the moving average band, going long there. You would have got out long there, gone long there, close your long entry there, enter another long position there, close it out there, enter long, close it out, and so on. But especially notice the divergence, any bearish divergence. As soon as you start seeing lower highs, get out of the trade of long positions in this case. Thanks for watching. Hit that like and subscribe button to support the channel. That'd be greatly appreciated. But also reference the Patreon page where we look at weekly bullish shares each week across various regions of the world's markets. Thanks for watching, and see you in our next update.